Good morning, good afternoon, good evening, and welcome to NestCast Live. It's September 24th, 2020. My name is Jim Chu in San Francisco, California, and our goal with NestCast Live is to have an open dialogue about topics relevant to investing and entrepreneurship in emerging markets. Well, great. Welcome all the panelists for joining us. You guys have a wealth of knowledge on this topic, so we'll try to fit in a lot of your insights into this next 50 minutes. So now over to the topic: is the venture capital model the right model for Africa? The success of technology startups, especially those from the US, has become almost legendary. So it's not a surprise that whether through muscle memory or through deliberate choice, we've copied and pasted the model for investing in other areas: impact investing, investing in Africa, etc. Well, I think the question is, does it work? Is it right for investors? Is it right for African entrepreneurs? Is it the right kind of investment that Africa needs for economic development? Are we setting ourselves up for failure, or will we see an even bigger tech revolution in Africa? So this is an open conversation, so who would like to start?
I can go first.
Thanks, Brenda.
Cool. So this is a difficult conversation because the VC model was not built with Africa in mind. And that said, the VC model could be a fit in some instances, but businesses in Africa range from SMEs to the tech startups, who all need different kinds of funding. And majority of businesses in Africa are actually SMEs. So VC funding is not a match for them. And we also don't have anywhere close to the amount of capital that is available in other VC markets. And so it makes it a bit hard to make this comparison, but could VC money obviously work for tech startups? I think possibly yes. And we've definitely seen an increase on funding that is going to tech startups on the continent. So as much as the market is undercapitalized, there is something that is working, and I think that's something worth celebrating.
So what I hear is that you think that there is applicability in a portion of the market, but perhaps there's a much greater need.
Yes, definitely.
Okay, great.
So maybe I want to chip in. I agree with Brenda. I mean, for me, I believe there is room for VCs and the VC model in Africa, but it should be one of many financing options for entrepreneurs. The issue I have with the VC model, not only in Africa, but also in the US, is that the Silicon Valley model has mythologized the VCs as the gatekeepers to startup success. And this, in fact, is not the case. Actually, 70% of VC-funded startups fail. But the issue that has come up with regions adopting Silicon Valley model is that there's an entire infrastructure of accelerator programs and boot camps that have been created to funnel startups to VCs. The issue is those lessons are not always right for mid-sized companies, for companies that do not fit the VC model of hockey stick, 10x, and unicorns in the making. And so for me, I'm really advocating for a complete relook of how to democratize innovation and to allow, how can we profitably finance smaller companies that don't have 10x return? Is it revenue-based? Is it others? And this is a new trend which is coming up in the US, and there's a lot of companies that are, and investment options that are coming up. Lighter capital, there's one called Tiny Seeds. They're rethinking how to invest in startups.
So I'm hearing a common theme among two of you now, which is, smaller, more, if you will, traditional companies, SMEs, need a different form of financing. Okay, great. Stephen, I think you have something to say.
Yep, thanks. And I do agree with what has been mentioned already, but maybe just to split the question a bit, right? So does it work? Does it work for who, right? So there's the investors, there's probably the entrepreneurs, and there's the ecosystem. So if we look at it from an investor perspective, The research we'd done in 2017, where we asked that question and we spoke to several investors, pointed out to the fact that it was not working very well for investors. And the question, the reason behind is that if you imagine the whole staircase of funding, starting from family, friends, going to angel, going to VC, and so forth, till the listed companies, the IPOs. If you look at that, we don't have that staircase in Africa. Most African markets, you don't have that staircase. So you've come in, you've planted something in the middle, but then as a VC investor, you're being forced to really come very early to pick companies, but yet you have a fixed amount of time to turn them around and to generate a return. And you're being forced to stay, and ideally for you to generate return, you'd have to stay with them much longer. So from an investor perspective, we found that was one big challenge. Then there's also the issue around just the fund economics, right? And based on our research, we found that if you don't have a fund that's at least $30 million and you're doing sort of like regional deals, so you can't be in one country only unless you're doing maybe South Africa, Egypt, Nigeria. But when you go to the rest of Africa, you have to do probably 3-4 countries. And so the fund economics don't work with a very small fund. And there's a number of those kind of small funds. If you move into the entrepreneurs, again, it doesn't quite work as effectively. And the challenge behind that is also VC as sort of like interpreted in Silicon Valley is very different here. You have a lot of DFIs who've put in money and foreign investors. So, and I think I read some reports around 70 to 80% of the funding in most venture capital funds, at least in East Africa, are coming from foreign investors and DFIs. Now, DFIs do not understand what VC is because they come in with the impact metrics. They sort of like don't go for that, high risk, high return model. It's, a bit of risk, then there's a bit of impact, there's a bit of return, which then dilutes that model to a certain extent. And so for an entrepreneur who comes in and sort of like they're just saying, let's scale, let's go across Africa, let's focus on the numbers only, they'll always find that there's additional expectations from the investor. And so to that extent, doesn't work as well.
So when you talk about this ecosystem curve or the curve of the different companies involved, at least from your experience in your model, what do you think is the ideal profile of the company that works for your model in your regions?
I think it's, I would say the dollars are different, but the curve is the same, right? Okay. I think, if you take a zero off whatever you fund in the US, you find you're funding the same thing in Egypt at the same stage.
So
right?
Highly scalable,
exactly. That's what we're looking for. And to Brenda's point, we're not looking as a VC firm. It's not our role. We have not defined our role as solving social problems or funding SMEs. We defined our role as funding high growth companies for several reasons. High growth companies are the ones that create the jobs. One of our companies, over its 10-year cycle, 160 founders left and started new companies, 160 employees, because they had seen what a high growth company looked like, right? So one really successful high growth company has a cascade effect that transforms an ecosystem. And the last point is the biggest thing that was missing in Egypt that I think is missing in most of Africa, which is why foreign founders get funded, is the entrepreneurs that did not happen 20 years ago. Where are those guys to be the mentors of young people to bring them up? They didn't exist, right? Where are the 50, 60-year-old successful entrepreneurs who are now angel investors? There's a few of them, handful. You can't, in all of Africa, you probably can't find more than, 50. It's crazy. Those guys that started these tech companies that were successful or scaled or did something that are now giving back. And same as in the US, people sit with, you see all these personalities that take people under their wing all the time. So that's really why, that's what makes me optimistic, is the generation of the people like the ones on the call today in 10, 15 years, they'll be doing what that role that's missing that, people my age should have been filling in.
So Robley, you obviously have something to say. It sounds like everybody has something to say. So
yeah,
please.
I would have to respectfully disagree with Mr. Ahmed. I did an article on this in Kenya, and a white a white American founder has 50% chance, more likely to get funded in Kenya than in the US. And I actually did a study on who these founders are that are moving to Kenya. A lot of them are straight out of college with no experience. And most of them are not technical. And
I don't disagree with that point, by the way. If I disagreed with that, I apologize. I do not disagree with that point. That is wrong. Okay, that's 100% wrong. I'm not justifying that at all.
So yeah, but I'll give you the makeup and the reason why I feel, and this is unique to East Africa. If you go to Nigeria, I think the numbers are better. If you go to Egypt, the numbers are better. But in Africa, in Kenya specifically, we're talking about as village capital, 75% are white founders. The reason
90.
I believe that is the case is because these entrepreneurs have a better way of articulating unicorn-esque type projects. They have no personal and experience with problems that are happening in East Africa, but they are pitching the Uber of Africa, the Airbnb of Africa. These are not kind of, very creative ideas.
Well,
it's appealing for lazy VCs, I should argue.
So I think, supporting what Ahmed is saying is that, perhaps some of these founders are coming from ecosystems where there is perhaps they're more accustomed to seeing these, as you say, Robley, unicorn companies, and more accustomed and being part of that ecosystem. So maybe they haven't had the experience, but because they have the unicorn dreams, they are pitching the unicorn ideas.
But
Sam,
I need to clarify. Don't
yes,
interpret
please.
my comments to disagree with anything you said, Robley. Okay? Your complaint is front and center. I agree 100%. All right? And there are VCs who are lazy and sloppy.
Yep.
Right? And there are people who are just pure freaking racist. All right? I'll fund, the white kid is the one I'm going to fund. And maybe some of them are sitting outside. And in Silicon Valley, right, they're going to throw some money here and I'll throw a little bit in this country. I'll throw a little bit in this country. Okay. 100% agree with you. I don't, that is not a burden that should be placed on the concept VC for Africa. I think VC for Africa in Africa by people in Africa. I hate parachute VC, right? If you're going to do parachute VC, you're going to make a lot of mistakes. You're going to screw up valuations. You're going to, put some dysfunctionality in the system. But I want people on the ground. I moved. I packed up 15 years ago and moved because I thought that was the right way to do it. So I'm with you 100% on those points.
In my mind, a massive need in Africa for financing for SMEs in particular. Ones that may not be massively scaling, but have an incredible economic impact as an aggregate, and really don't have a way to find financing today. Do you have thoughts on that? Do you have alternative models? Maybe Robley, you can jump in on this. Are there alternative models that perhaps are better for some of these type of companies? Go ahead, Sam.
Yes, so there are other solutions in addition to what you said, Stephen. I think venture building is another model. An organization called Green Tech Capital, they have this equity by results model, which essentially what they do is they don't make cash investments. They support this company by helping them build. So they mutually agree on the KPIs to meet, for instance, at the end of the year, on what X amount, what they agree on what targets to meet. And this is a model where I think could be effective for SMEs to help SMEs actually reach particular targets. Another model that we've seen at GSMA is actually corporate venture capital. Safaricom being an example, launching a CVC fund where they're supporting startups. And actually, when the fund, when they started the second phase, earlier this month, but the first phase has funded some brilliant startups within Kenya. Sendi being an example, and Neza Education being an example. The model GSMA uses is more of the smart grant funding or, more KPI-based funding, which has really worked well with companies that they're not particularly, they're seeking 100,000 to 250,000, pounds. And we have several funds in the pipeline. I'm happy to share more information on that. We have an assistive tech fund running at the moment, which I'll share in the chat.
So yeah, I'd definitely like to chip in here. I mean, we have to understand the VC model is equity based, and a lot of times they're investing early pre-revenue, so the risk is higher, and so the expectation for returns to meet the investor returns, they really need to get 1 or 2 big wins. And so it's a very risky model, and it's worked in the US. There's a big question whether that numbers can be met in Africa. For me, one of the things I looked at as an entrepreneur here and trying to get into Silicon Valley and failing was, can I emulate other companies that have been successful outside of Silicon Valley? And for example, there are 2 companies which I do a case study on is MailChimp and Atlassian. These 2 companies, they're pure software service providers, and they reached $1 billion of valuation with 0 VC funding. The technology at this time, cloud-based computing, makes it very cheap for people to get products out in the market for very low. So there is a need of focus to strengthen those skill sets for bootstrapping. But beyond that, what we're looking in the US, Lighter Capital is doing and very good with revenue-based financing directed to and tech entrepreneurs, and they do like a 3x return, and they can lend you up to 3 months of reoccurring revenue. So you have to be revenue positive. So in any way of getting entrepreneurs to revenue positive and then figuring out how to finance them is a good way to lower the risk and to clear out the requirement that they need to be at a 10x. Investors can come out at a safer way by maybe a 3x because they know they can rely on some revenue-based financing. Another interesting example that I've been seeing in Minnesota is a company called Tiny Capital, Tiny Seed, and they do equity-based financing, but they only focus on SaaS companies, and you have to be close to revenue positive. And the deal with them is they get their return on equity, on dividends. So anytime the entrepreneur wants to pull out money, they also have to pay Tiny Seed some. So there are a lot of kind of combination of debt and equity. There's a lot. What is missing is innovation in the financing of startups.
All right. So now I need to make a plug for Untapped Capital because I think, and please, I'm just going to put a plug in here. Because yes, no, I want to highlight your revenue sharing concept. I mean, there are innovative ways or innovative things you can do to help finance that is not purely capital blockbuster based, right? And at Untapped Capital, that's exactly what we're trying to do, and we're trying to focus on SMEs that aren't the right kind of companies for venture, but have a huge impact on African entrepreneurs and the market in general. I just want to relay some comments and questions from the audience. Mutabazi Jeffrey says, I think most VC investors come to Africa looking for Silicon Valley type businesses and business models without considering the fact that the problems in Africa are mostly basic and don't need the complicated type of solutions they're used to seeing dominating VC rounds in Silicon Valley. And also another from Katrina Sheridan, that African SMEs and entrepreneurs say they are concerned about being fleeced by taking on external equity. Many just need working capital for a period of time rather than large amounts of money. I think 2 very valid points. What problems are we solving? And maybe I'll switch the discussion here a little bit. So what kind of exits are actually available for, for African VC companies? Do we have the right exit markets in Africa? I like that. Greater will drive the way. All right, Robley.
So, I mean, what I would say is we have 10 years. I don't think we can count the successful exits in two hands. And I think you bring up a very good point is in the US, there's a lot of exit ramps. Yeah. So one of the big issues in the US, actually, people like me have brought up is a lot of VCs look to corporate companies like Microsoft and Facebook as exit ramps because they have this huge cash reserves that they need to find. But what it has resulted in is a consolidation of products. Yeah. So now we are fighting kind of these big and these antitrust movements going on to break up this company. In Africa, it's a different thing, and that's why and it's logical to say, hey, be open-minded and say what are the other alternatives, like Stephen say, even if you're stuck with VCs, how can we make it more and work for Africa, even from an exit perspective? But for me, I see this conversation is a conversation about 1%. We need to be talking about 99%, and 99% are not unicorns. They are zebras.
Okay. We need the zebras.
Just to weigh in on the exit question. So I guess it also depends on the markets that you're looking at. If you go to markets like South Africa, Kit of Knife Capital did a very good presentation, I think in 2019 at the Africa Early Stage Investment Summit hosted by ABAN. And he spoke about his portfolio. And I think he's on his second fund at Knife Capital, and they've probably exited 10 companies. And of all those 10 companies, if I'm not wrong, a majority, almost 90% of them have been just trade sales. And that's where most people are going to be exiting. You know, the examples of companies that are going to the stock exchange and listing are very few and far between. Like in Kenya, of all the startups that have been founded, I know, people speak a lot about Kenya. I think there's only one, to my knowledge, that has listed, and this is Mdundo, which listed, I think, last week. And it didn't even list in Kenya. I don't know if it was in Norway or one of those countries, just one that has listed. So IPOs are going to take a bit of time before they develop. And I think there's some research that's pointing to the fact that you're not having as many companies that are listing. The pace of listing companies in the stock exchange has actually decelerated over time. So I think trade sales is the way to go. The only question we need to ask ourselves is whether our corporates are willing and ready to make these kind of acquisitions. Because I see a lot of acquisitions from outside, but our corporates, there's Safaricom should be gobbling up quite a number of companies, but they're not. What they're doing in such an instance is calling people into a room, listening to the different ideas, and then sort of like just saying, okay, you know what, we're going to do it ourselves, right? So I guess it's also a cultural shift that needs to happen to have corporates gobble up companies to create that exit market.
Sam, did you have a thought on the previous topic before we jump into crowdfunding?
Yeah, I can quickly touch on that and maybe touch on crowdfunding as well. I do echo that point that I think IPO are becoming less attractive, not just in Africa, but also globally. If we see what's happening, where I think the model startups are starting to really lean towards corporate acquisition. And I think going forward, partly what we need in Africa is for startups to work with startups. So the mergers, we need to see more mergers happening. Several fintech companies out there, several health tech companies out there, working across regions. And I think when you start pulling the expertise and actually resources, human resources across the continent, I think we will be able to actually build companies that really can stand the test of time. And then we can start talking about acquisition from corporates. And I think that's kind of the missing link at the moment. I mean, when we look at more companies, I think acquisition and mergers and acquisition will be the route to go. On crowdfunding, I haven't really seen a model that works very well in Africa. I think right now we're seeing more of sort of community capital coming in. We're seeing more of the rolling fund, conversations around rolling fund. There's an Inkali fund running in Ghana and Nigeria about to kickstart. Whether or not those will be successful is questionable, but they do have potential. But I think the other path, which could be crowdfunding, is exploring the diaspora and and tapping into the diaspora and to invest in African startups. And I think there are huge opportunities there.
Jim, I just want to add, I want to caution with the corporate acquisition. You know, for us here in the US, we're definitely seeing the disadvantages of having a Facebook, for example, on multiple social networks. Yeah, we are seeing the disadvantages of Amazon playing as the market and a market participant, and so it really perverts the market, the free market economy, and deny and limits innovation. And we see that also in Kenya. So I do not want a situation where Safaricom is gobbling up every innovative company. What I want to see is companies disrupting and fighting against Safaricom.